Boom. Hey everybody, thanks so much for tuning in to Young Money Investments. My name is Cameron Bennion, and today we're going to do a quick recap on the live stream that I did. So the live stream did not actually save. I don't know why it didn't. I'm not sure what happened with that. So only a few people actually got to see it. Unfortunately, there's some good information in there. But that's what happens if you don't tune into the live stream. You just don't get some of my quick little call outs. But on a separate note, we are going to actually talk about, I'm just messing with you. I'm going to share everything, most everything. I don't remember everything that I shared, but I'm going to share most of my top picks for this week. There's a few that I see potential value in. Most of them are going to be swing trades that could potentially be longs if the chart pattern does not work out. I'm going to give you out strategies, so where you would want to potentially cut your losses. Again, these are not meant to be buy and sell signals. If you are doing this, I want you to be doing your own due diligence, doing your own research, learning on the Thinkorswim platform, because I'm not perfect. The reality is I do make mistakes sometimes as well. You need to find value in it, because that is what will keep you in a position if you do end up needing to hold through a turbulent time. Or it gives you the ability to go, you know what, I need to cut my losses. I know this is the time to cut my losses, so I'm going to do it right here. I will give you one short play that I'm also in right now and that I do plan on adding to. So let's roll into it. Let's get to it really quickly. I'm going to minimize this window down so Trevor can get to watching his Hawaii 5-0. He is very intrigued and excited to see what's going on in Hawaii 5-0. So... actually, I think he's reading or watching a conference talk. Like, such a good little spiritual animal he is.
Are you really putting that in?
Yeah, tell me this is live. Okay, so this is going to be in no specific order. It's going to just simply be a few of them that I see potential value in. So first off, today we are going to look at Facebook. Facebook is one that I got into, averaged in right at about $163. Could you be any louder during my flipping video, Spencer? Jeez Louise. This video is going to be horrible because my roommates can't be quiet. I need like one of those massive like quiet on set signs or something. Freaking A. I'm going to need those boxes. Don't take them out yet. Yeah, I might need them. Not that box, though. The Segway boxes I'll need. Oh, jeez. Okay. Sheesh, this freaking video. Glad I'm not, like, getting paid for these, because these are B quality at best. Spencer never cleans either, so this is such a rare miracle that he's actually doing this right now. So Facebook, like I was saying, I bought in at about $1.63. So I am actually currently up right now on my position. I do see potential value right here because $1.73, 173 was good, was resistance. It had tried to break it over here as it had its descending pattern. I do see where it is starting to validate though. You can see where it had a nice little rip, came up, and it is validating along the EMA line. If it can continue to do this, I do see a potential for a run up from where it is at currently all the way up to roughly $184, which gives you another 6.25% potential for profit. Now, I like that. I like 6.25% chance at 6.25% profit for a nice week swing trade. If I can make 6.25% in a week, I'm very, 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 very happy, especially on a larger portfolio. On a position like this, if I were to get more into Facebook, I would probably take another $15,000 position. So I gotta ask myself, $15,000 times 0.065 is $975. So let's say about $900 to $975 I could make in a week off of this Facebook swing. To me, that is definitely absolutely worth it. It should use the EMA as support. If it does start dropping below, obviously it's going to probably run down into this area. Long-term, Facebook is a great play. I think long-term you could hold Facebook for quite some time and have no issues. That's why I do like swing trading Facebook, because if it doesn't work out, and let's say it does drop, 8%, Very unlikely, but let's say it does. I can hold Facebook. I'm happy holding Facebook because it's Facebook. It's worth it has great value. 5 years down the road, this company is going to be worth $200 or $300 a share. It's a good value, and so I don't mind doing that. I'm not holding the bag per se. Next stock that we are going to take a look at is going to be L Brands. L Brands is a corporation that owns Victoria's Secret, oh yeah, and it also holds Bath and Body Works. So if you notice the chart pattern on L Brands, first things first, Victoria's Secret is always busy. Bath and Body Works, my mom is always in Bath and Body Works buying stuff. Both companies have really good, strong earnings, I think, and I don't see them going anywhere. They had quite the run from back here in August all the way until about January. I mean, if you look at the potential for profit for that, whoops, too high. We have to bring that down. If you look from the base to the top here, I mean, 67% was the sell-off. To me, that is huge, 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 huge. So 67%, it is consolidating again down here where it has been within the past 180 days at about $35 per share. I do see the SMA acting as potential resistance, as you can see right here. It acted as resistance through this section. And so I do see potential resistance up here in about the $41 range. From that point, though, you're still looking at about a 13% potential for profit from where it's trading at. I love the odds on that. I do see L Brands as a good long-term swing trade, if not a potential long-term hold. Because if I do hold this for, let's say, maybe 4 months, and I do have the potential for a bounce back and a run up, even if we run it up from here all the way to roughly $47, $48, we get into this, we have a potential for profit of about 35%. So I would like, and I actually will end up buying and taking a position in L Brands this week. As long as I don't see any more slide off and there is more consolidation, I'm going to buy and take a position in L Brands. So that is one that I will be in as well. Cirrus Logic, another one that I see long-term value. And when I say long-term, I think it has a lot of long-term potential for value. As far as probably the next. Spencer, I can smell your freaking cologne out here. I see a lot of value in Cirrus Logic. They are a chip maker for Apple. 80% of their business is from Apple. Long-term value, I think they are going to be creating a voice biometrics chip, which will make it so you can say, hey Siri, what's my bank account? Sorry, Siri's going on. You can say things like that, and Siri will actually know that it's you based on your voice and your tonation of the voice. Long term, I do see them potentially tripling their value, but I see Cirrus Logic as more of a, like, that not starting to come to fruition for another 1.5 to 2 years out, where those profits will start to be seen. Next off, though, I do see, like I said, buying in at this $34 price point is great. I really do want to average my costs down. I'm bought in somewhere right around $40 per share, $40 per share up in this area. I do see value now, since it has broken down, to buy down here in this $34 price range. You buy down here, it is trending on the EMA, and I'll actually show you. But you buy down there and you write it up here, you're looking at about an 18% potential for profit. I found value 18% earlier in it, so I obviously see even more value in buying it 18% cheaper right now. If you do look, it's been trending solidly along the EMA line. It's finally starting to break above your EMA. It's trending above the golden VWAP as well as the EMA. So I do see a potential swing trade for some of you that would like to swing trade this from $34 all the way up to about $42. You have about an 18% potential for profit. So if there is a trade to get in on, again, I do see a ton of value either swing trading or long-term holding Cirrus Logic. Next one that we are going to talk about really quickly is Nvidia. Now this one I see it as a pretty solid potential for profit. It's obviously on an ascending uptrend pattern here. You like seeing ascending uptrend patterns because more often than not, it's going to continue to go up. With this pattern, it's been trending very sideways over the past couple months. We do have earnings coming up. Nvidia always blows earnings out of the water. Earnings for Nvidia is always really good. And I do think that we are going to have another spike. So if you look right here, boom, Nvidia spiked. Over here, earnings report, boom, Nvidia spiked. And these are pretty good jumps. I mean, 7.69% on that earnings report. This one right here, oh, oops, I can't write it right there. Let's say it started right there. I mean, that right there, 12.65%. Earnings for Nvidia is always really good. They've been blowing and just murdering earnings reports. If you're looking right now, though, just based off of the chart pattern, even if you're not going to hold through earnings, you're buying at support right here. Yes, you have a potential to write it down, maybe 4%, but your potential for return is looking at about 12% from where it's at currently. So you have a potential loss of about 4% down to here. If it does drop, I say average cost in, maybe lower your cost per share or average cost per share on that, and then write it back up. I would potentially hold through earnings unless it gets up into this price range before earnings. I highly doubt that. So maybe you want to wait a little bit closer to earnings if it does continue to trend sideways and see. But I do see a very good potential for profit in Nvidia. So I'm excited to watch this video in a couple weeks and make sure and kind of see how all my predictions have played out. Next one that we are going to talk about is DGAS. DGAS is going to be an inverse ETF, or not an inverse ETF. It is just a credit ETF. It trades very, very horizontally. So it's not trading vertically. It's not trending down. It's not any of that stuff. It's very horizontal. You see a very horizontal and very predictable pattern. Look, touch support here. Touch support, dropped a little bit below. Touch support, touch support. Didn't reach support. Touch support, touch support. It has used this as support quite a bit. And then if you go up here, I mean, just look how many times. 1, 2, 3, 4, 5, 6, 7 it consolidated. 8 it consolidated for a few days. 9 right here had a lot of consolidation. 10 had some consolidation before breaking down, coming back up. I wouldn't count that as 11. Wouldn't count that as 11. Consolidation, I call it 11. 12 it touched. 13, maybe 14 right here. 15, 16, 17, 18. This price right here, this price at roughly $26 is massive. Massive, massive, massive for DGAS. So if you look right here at the support it's forming right here, you also look a little bit closer on DGAS, you're going to see it's trending above the EMA line. It had a couple really good days. In fact, if I pull it up here and take a look at what it did on Friday, just out of curiosity, I'll pull it up on my phone. So DGAS, there it is. Friday, yes, 5.68%. It shot the frick up. Look for maybe consolidation. Look for maybe a pullback tomorrow, where it does have a little bit of a sell-off. It validates support on the EMA, and then look for this baby just to go. I do see, like I said, it having the ability to run up at least into here, giving you a potential for profit of about another 11%. I mean, 10 to 12, yeah, 10 to 13% potential for profit. I would start selling probably at about 10% gain, depending on where you average in. If it were to break support here, I would sell it. This isn't a company or an ETF that I see long-term value in, so I wouldn't hold it. Don't be a bag holder on this one. Sell it off, take your loss, maybe you'd have, let's say you buy it right there, you write it down, you take a 4%, you take like a 4% loss. Yeah, it sucks, not fun at all. But a 4% potential for loss with a minimum of 12 to 13. I mean, you could even ride this all the way up to, again, support at about 16, 17%. So if you make 11% profit, your potential for loss is about 4. I'd say those are pretty fair odds. I'd take it. I think that's actually a really good play right there if you ask me, and I will actually be be getting in on that. Last one that I'm going to call out. I was going to go over Apple as well for a long-term play. I see a lot of value in buying Apple right now at its current price point. I'm not going to show that in the charts and everything because of the fact that I don't have time. The very last one I wanted to go over was a short position that myself and Rhett are in. I don't know why I was calling Rhett Van Loon. I sound like a dummy when I say that. But if you look at Intellisat, they started trending up over here, and basically over the course of a month, they have shot up 185%. This company has $15 billion in debt. You look at the financials on and it is ugly, like ugly. They do not deserve to be that high. There should be earnings that should be coming out, and I don't know why it is not marked on here. There's obviously market manipulation from times. There should be earnings that are coming out this week. Should be on Tuesday. I'm holding some shorts on and Rhett has a freaking filthy amount of shorts going on in It shouldn't be this high based on the debt and the valuation of the company. It's a garbage company, quite honestly. So I do see this selling off, at least from its highs where it's at right now. I mean, we're looking and talking about a short percentage of about 43%. So if I can ride this down from 1036 where it's at right now and ride it into the sevens even, I mean, if I can ride it down here, I mean, 25% is just going to be nice. But it's going to be brutal. I mean, if you look over here when it had a massive sell-off, I mean, you're looking at 25%, had a 25% sell-off right there as well. So, and that was right after an earnings report. So I see a lot of potential in this short. Again, I do not recommend any buys or sells based on my strategies here. I simply am giving you a couple different options of what I see value in. And if you would like to take a position in those, great, do it. If not, don't. I mean, that's the reality here is there's so many different options and there's so many different plays in the stock market. My goal is to give you a couple strategies and a couple stocks to take a look at. Even better for those of you that are learning and that are taking the time and the patience to look at these, watch this video, write down what I said about these, and then look back on it in a week and go, hey, was Cameron right about this, and this? Okay, if he was right, what did he do, or what were the patterns that he spotted in order to see this coming to fruition? If he was wrong, what was he wrong about? What was going on? And I'd love for you to post that in the comment section. I'd love for you to send me a text message, DM on Instagram, you name it. Send me a message. I'm always curious. I'd love to see what y'all kind of gathered. It makes me smarter. It makes y'all smarter. And it makes the community smarter as well in terms of investing. So I'm so grateful that I get to be here and get to be your guide, your mentor, and kind of help out with learning the stocks. But yeah, that's everything. So hopefully y'all are having a good Sunday. If you missed the live video, the live stream earlier, I'm going to be doing those every single week. So you can actually type up a message, get to me, and I hope those are actually fun. So thank you so much for tuning into Young Money Investments. Thank you for being a part of this. Thanks for, just all that good stuff. And I'll talk to you later. Bye.